You ever see this happen? A company comes out with what looks like fantastic news, and its stock just gets absolutely hammered. I mean, it's one of the most confusing things you'll see on Wall Street. And, well, it just happened to the software company Twilio. So let's dive in and try to figure out what on earth the market was thinking. So get this. Right after they dropped their latest earnings report, Twilio's stock just plummeted. We're talking a staggering 21%. I mean, wow, that is a brutal, brutal day for any company, but especially for one that, on the surface, seemed to be doing everything right.
And that right there brings us to the big question, right? The whole reason we're digging into this. What did the market see that caused this level of panic? I mean, how does a beat on earnings turn into a total bloodbath? The answer, it turns out, gives us a really critical lesson in how Wall Street actually thinks.
Okay, so to get to the bottom of this, we've got to wrap our heads around the paradox at the very heart of Twilio's story. Because on the one hand, the company put out a really solid report, but Wall Street, they didn't just ignore the good news, they acted like they just heard a 5-alarm fire drill. It was wild.
And here it is. You can see the disconnect right here, side by side. In one corner, you've got classic good news. Sales are up, earnings blew past what everyone expected. Awesome, right? But in the other corner, you've got investors just stampeding for the exits. And that tells you everything you need to know. The panic wasn't about the quarter that just finished. It was all about what Wall Street is afraid is coming down the pike.
All right, so to really understand why they freaked out, we have to do something a little different. We need to put on what I like to call bear goggles, okay? We got to stop looking at what did happen and start seeing the future through the super anxious, super critical eyes of a Wall Street trader. They're always asking just one thing. Yeah, but what's next?
And with those goggles on, here's what they saw. First off, yeah, Twilio raised its sales guidance for the year, but it wasn't the huge blockbuster number the market was hoping for. Kind of underwhelming. Second, the new forecasts seem to hint that profit margins might get a little tighter in the future. And third, the company said it's going to be spending more on R&D. Now, for you and me, that might sound good, but for Wall Street, that's a scary combo. It screams slowing growth and rising costs.
But is that the whole story? Oh, not even close. All right, let's take those bear goggles off now and look at the actual business itself. Because this is where the other side of the argument, the case for a comeback, really starts to take shape. And it's all based on the fundamental strengths of what Twilio actually does.
So what is this business anyway? Well, think of it like this. Twilio is kind of the invisible engine behind a ton of the apps you probably use every single day. You know when your rideshare app texts you, your driver is here, or you get that instant password reset email? There's a really, really good chance that Twilio's digital plumbing is what's making all that communication happen behind the scenes.
So remember that whole fear about shrinking profit margins? Well, check out this quote. This is the perfect counterargument. Twilio actually raised its prices recently, and according to analysts like Siti Panigrahi over at Mizuho, customers aren't even blinking. They're not pushing back. Why? Because they see Twilio as the best in class, and they're willing to pay a premium for that reliability. That, my friends, is what we call pricing power.
And what about that so-called disappointing guidance? Well, context here is everything. You have to know that Twilio has a long, long history of underpromising and then over-delivering. I mean, get this. They haven't missed a sales estimate in more than 20 consecutive quarters. That's 5 years. On average, they beat their own forecasts by over 5%. So if they just do what they normally do, their growth in the second half could be almost double what they guided for. It really suggests their guidance is, super conservative. And we're not talking about a small niche market either, not at all. The total market they're playing in, it's projected to hit $119 billion by 2028. That is an absolutely massive runway for future growth, even for a company that's already as big as Twilio.
So when you put all of that together, you've got strong pricing power, a history of crushing their own forecasts, and a gigantic market to grow into. It just raises this one huge question. Has the market's short-term panic created a really attractive long-term opportunity? Let's try and put a number on that.
And wow, that opportunity becomes crystal clear when you look at this valuation gap. Right now, Twilio is trading at just over 3 times its expected sales, okay? But the average software company trades at almost 11 times sales. That is a massive, massive discount. It really suggests the market is pricing in a whole lot of pessimism that maybe just isn't warranted.
Okay, let's pull this all together now. What we've basically got here are 2 totally different stories about the very same company, and they're playing out at the exact same time. You've got one story driven by short-term fear and another one that's based on a long-term view of the actual business. And really, it all boils down to these two competing narratives. The bear case, it's pretty simple. The future just looks a little slower and a little more expensive than people were hoping for. End of story. But the bull case, it's just as compelling. It says this is a market leader with an incredible track record of outperformance, it's got strong fundamentals, and hey, the stock looks downright cheap compared to everybody else.
And so, that leaves us with the ultimate question, doesn't it? If you're looking at a story like this, what do? Do you trust the market's immediate, gut punch, fearful reaction? Or do you bet on the underlying business fundamentals to win out in the long run? Honestly, that's the billion-dollar question at the very heart of Twilio's wild ride.